We begin with breaking news. US stocks have surged on Wall Street after Donald Trump announced a 90-day pause on tariffs for non-retaliating countries, effective immediately. Now, that prompted the S&P 500 index, one of the stock markets in the US, to jump at one point by as much as 8%, with the tech-heavy Nasdaq index up by as much as 9%, and the Nasdaq currently up nearly 7%. In the posts which the president put on the Truth Social platform, he also announced that he's raising tariffs on China to 125%. He said this: based on the lack of respect that China has shown to the world markets, I'm hereby raising the tariff charged to China by the United States of America to 125%, effective immediately. At some point, hopefully in the future, the near future, China will realise the days of ripping off the USA and other countries is no longer sustainable or acceptable. A little earlier, the US Treasury Secretary, Scott Bessent, was speaking outside the White House on this announcement, and he said China is the most imbalanced economy in the history of the world. Have a listen.
They are the biggest source of the U.S. trade problems, and indeed, they are problems for the rest of the world, because what we've seen is that as the U.S. announced a tariff wall last week, many of those goods have already started flooding into Europe. Well, I'm not calling it a trade war, but I'm saying that China has escalated, and President Trump responded very courageously to that, and we are going to work on a solution with our trading partners. The president had a level in mind to raise the China tariffs, and then he had the essentially the 3-month pause in mind, and we were discussing the exact wording. Sorry? Of course.
The president's decision.
It's the president's decision. It was the president's decision to wait until today. And again, as I've said in the past, no one creates leverage for himself like President Trump.
Well, let's cross live now to New York and speak to our North America business correspondent, Erin Delmore. Erin, talk me through the reaction on the markets.
An explosion of growth is probably how I would put it. I mean, we are seeing the Nasdaq up at the moment 10.16%, the S&P up 8%, the Dow up 6.8%, 2,550 points up is the Dow right now. Astounding, an astounding reversal for a market that was in turmoil all day, really dropped this morning on the news of China's retaliatory moves and on the EU and Canadian retaliatory moves, and now just exploding into the green. You know, to hear Treasury Secretary Scott Bessent say it, this 90-day pause is what he's calling a temporary floor. He's saying that it gives more certainty. That's certainly how the markets is interpreting this right now. And he's saying that the U.S. is going to negotiate in good faith. That is music to investors' ears. They want negotiation instead of retaliation, and investors want to know that there's more certainty around the peak. But as Simon Jack said to you in the last hour, there's going to be conversation now over who blinked. Whether President Trump had been playing this hand all along, looking to negotiate better deals for the U.S., having negotiating partners come and beg for an agreement, as he says it, or whether pressure from the markets, from investors, from constituents of members of Congress, and those elected officials themselves finally weighed the White House into this 90-day pause. One thing that Bessent said is that what China is doing will affect their economy more than ours, and he criticized China for what he called flooding the economy with cheap goods. That is core in President Trump's stance. It seems like after that list of many dozens of countries, President Trump has now narrowed his vision and set his sights on only one, China.
Erin, good to talk to you. Thanks for that update, Erin Delmore there. Well, let's cross live to New York again, and this time speak to Thomas Hayes, chairman at Great Hill Capital. Thomas, it's so good to talk to you. I'm guessing you're seeing what the markets are doing. You've seen what President Trump has said. Give me your reaction.
Well, this is an absolute game changer, Miriam. And, you know, there had been a lot of fear in the market the last few days. People were comparing this to the great financial crisis, to the tech wreck. And the difference between this and those two crises that took years to work out was this was man-made, so it could be fixed in a day. And that's exactly what we're seeing today. And the beauty of President Trump's strategy and what he's done throughout his years is he escalates in order to de-escalate. So now we had a big ask, and now we're down to 10%. the 10% across the board looks like nothing and everyone is relieved. And in effect, that is a big accomplishment and goes a long way to balancing trade. And people now look at that as a very, very low bar. So they'll negotiate over the next 90 days. The key that the markets love is there's some rationality in the room. People generally believe the concept makes sense. Maybe they weren't in accordance with the execution. However, now we have the relief valve. And when it rains gold, pull out the bucket, not the thimble. There are things to buy.
Yes, absolutely. Thomas, tell me this, though. Some people are saying that this is America blinking. We've heard in the last hour or so from the Treasury Secretary, Mr. Bessent, who said this was his strategy all along. You kind of feel to me like you're saying possibly this is what the States, the America wanted from the outset. But even if this is an amazing, clever ploy to get that 10% running along all those countries, surely the markets don't like this level of kind of, going up, going down, pushing, pulling, not knowing where you stand. That can't be good for anyone or anything out there.
Yeah, I've had more fun weeks in my investing career. I can tell you that right now. But I can say one thing. It shows a level of good faith. We've got to win that we're getting some imbalances fixed. The negotiations will probably go on longer than 90 days. And hopefully at some point, we'll get them on the phone between the U.S. and China and start to chip away at some level of balance. And then the market can go back to focusing on what? Focusing on earnings, focusing on cash flow, focusing on growth, focusing on employment. And all those things have been pretty good. People were just starting to extrapolate. If we stayed in this frozen period for too long, would it put us into a recession? And now that we've unfrozen it, and we're going back to good faith negotiations, I think the market likes it, and now companies can start to make decisions again.
We just had some reaction from the future German Chancellor-designate Merz, who said Europeans are united on defending ourselves, and this shows that approach works best. Everyone's going to be claiming victory tonight, aren't they?
Well, that's the whole thing. If everyone can save face, and a great deal is when no one is perfectly happy and everyone saves face. And if that's the case today, then today is a celebration. Let's get back to business. Let's get back to trade. If there's some imbalances that are going to be normalized over the next 90 days, let's get that done. And let's focus on growing and prosperity.
But what about the 125% tariffs on China? That's kind of a fly in your ointment there. And, China has backed itself into a corner, Thomas, right? How does it get out?
Well, there is that. But I think at some point, cooler heads will prevail. The signal is that if you're willing to come to the table, we have a rational administration that is willing to talk, and there will be some way for both sides to save face and begin a dialogue. Will it be tonight? Probably not. Will it be a week from now? We don't know. But I would assume within the next couple of weeks, 3-4 weeks, the dialogue will begin, and no one will be happy with the ultimate outcome. They'll meet somewhere in the middle, and things will progress as planned.
OK, well, Thomas, it's great to talk to you. Thanks so much for taking the time to speak to us on BBC News.
Thank you so much.
Well, let's talk a little bit more now about that 125% announcement on tariffs on China. Let's speak to Scott Kennedy, Trustee Chair in Chinese Business and Economics at the Centre for Strategic and International Studies. Scott, good to talk to you. I know that we've only just heard this news of this 125% tariff on Chinese goods, but, the numbers are pretty much just numbers. There's a direction of travel here that we're seeing. How worried are you about that?
Well, the numbers have already gotten so high, it really doesn't matter if they go up anymore. U.S.-China bilateral trade is going to fall dramatically in this context, no matter what. That's bad for both the Chinese and American economy and everyone who's connected along those supply chains if they remain in place very long. The president has already backed off on tariffs against others. He'll still continue to feel some pressure to back off on the tariffs against China.
Enough pressure?
Well, we'll have to see about that. I think what he's hoping to do in the next 90 days is outflank China. Those negotiations are probably going to pick up pace. And of course, the Chinese are going to be engaging those countries as well. And the country that feels least isolated is going to be the one that's least in need of getting to the table. But I also expect we'll start to see phone calls going back and forth between Washington and Beijing relatively soon as well.
In the long run, what's the impact going to be on China's economy? That one's quite a difficult one to determine, isn't it?
Sure. Well, I think, China's really depends heavily on its manufacturing and export machine for a lot of its growth. And I think this is a big signal amongst many that it's received over the last few years that it has to shift more towards services, towards domestic consumption to have a sustainable growth. So it stops, injuring others and leading to these types of trade wars. And that actually might be a good outcome from this. Of course, the U.S. also has a lot of vulnerabilities. It's not just on the trade front. And those will be hard to heal as well, because the volatility that the president has, put into markets, that isn't erased simply by a tweet.